right, for more on what is next for gold, let's bring in Ryan McIntyre. He's a senior managing partner at Sprott. Ryan, great to see you. You're seeing gold to 3,200.
Yeah, we first see the resistance for gold at 3,200. And if we see it break beyond that, actually, we see quite a bit of upside from there. So it could be just the first step here, but wouldn't be surprised if it bounced off 3,200 first.
How about the miners?
The miners are interesting. People have 100% gravitated towards gold in a physical way. But there's really been a lack of enthusiasm towards the mining stocks that mine gold, which is very interesting because typically when gold's hitting record highs, you tend to see a lot of enthusiasm for the leverage plays on gold, like gold mining equities. And you really haven't seen that to the degree we have seen in the past, which is very interesting.
We're at a point now where people are concerned about if they don't have it, they don't own it, right? Possession's 9/10 of the law. You better have it in your vault, safe, domiciled in your country. PHYS works in that environment. But speak to, I've been in the business a long time. I don't think anybody's seen anything like this, the thirst, the need for the physical gold.
You're completely right. I think people really have a visceral reaction to wanting something physical in this environment that's more certain. You know, if there's one trend that we're seeing today is people want something in an asset that's independent from other asset classes, but also independent from other institutions as well. So something that really stands alone, and physical gold really does that, where you don't have to depend on anyone for its outcome.
I hate to say that, I mean, this sounds like a strange question because there's no, obviously, PE ratio for gold, it doesn't pay dividends, you know, all these different things, no cash flow. But at what point would you ever say that gold is in a bubble? Or is there no circumstance under which gold is a bubble?
At some price, for sure. I mean, you can't deny that price is a huge factor in investment returns. I mean, since gold came off the gold standard in 1971, it's annually compounded at about 8% a year. And we'd expect that to continue as money supply continues to increase. And there's very little marginal addition of gold in actual physical circulation year to year. So that's very minimal. So it's really all about, you know, money being printed effectively.
So basically, you answered the question concerning the miners in a way because they have to deplete, right, I mean, they have to replace depleted assets eventually. And eventually, inflation hits their costs, right? So they have to deal with that. So is physical gold always the answer for you? To me, it's the permanent answer typically in a portfolio. We think that's a strategic holding that people should have at about the 10% level. But we also think miners can play a really good role as well. So anywhere from 0 to 5%, we think, based on valuations and enthusiasm. So if people were really excited about gold mining companies, they were raising a ton of money, huge valuations, skew that towards the 0 side. If people were, you know, benign about them, didn't care about them, more towards the 5% side. And what's interesting about gold mining companies, they get leverage to the gold price. So every 1% move in the gold price, we'd expect about a 2% change in profitability and therefore share price move. And the other part you get as well with additional gold price expansion is you actually get growth as well. And so that's growth in the reserve base, maybe growth through production expansions and so forth that actually is organic within the firm as well.
Did you at all in the last, I don't know, let's say year or so, feel any kind of threat to gold's position from Bitcoin?
We got asked that a lot. And I guess our view is, you know, we never felt that, but we could feel other people feeling that. And it's really tough when Bitcoin is doing well versus gold, and people are saying, oh, gold isn't the hedge that it once was and all this type of thing. But I guess our view is that, you know, gold's got the track record. Gold's got the unique attribute of being physical, which Bitcoin does not have. And it's hard or impossible to create gold out of thin air like you can with cryptocurrency. So to me, it's an asset class that stands on its own.